Connor, you said that you work exclusively with people whose wealth is tied to real estate, realtors, developers, investors. What's the number one thing that you see that puts their wealth at risk? Because I'm guessing it's not just the market, right?
No, and it's actually astonishing to me, especially, people who own, and I think the majority of Canada's wealth is somehow related to the real estate industry. Whether you're a builder, developer, architect, you're somehow related to the real estate industry. But, developers or investors, people who own a ton of properties and don't have planning in place. I mean, a lot of people say they'll do it later and stuff like this, but especially if you own a bunch of assets and you have capital gains within your company, God forbid you were to pass away tomorrow, some of these business owners don't realize that their estate value, how significantly it's going to be impacted. I mean, I was just talking to someone yesterday and he had about $8 million worth of capital gains in his company, and to pay the capital gain, of course there's some post-mortem planning you can do, but to pay the if there's, which he did none of it, like if you were to pass away tomorrow, 8 million of capital gains, I think after paying capital gains tax, and then dividending it out, and his family having to pay the tax, out of that 8 million, there'd be, I think, less than $2 million left. So you just worked 40 years to build up 8 million, and in overnight, 3/4 of that's gone.
That's crazy. And again, it goes back to what we said, that I think Canadian business owners are fed up right now about, again, not dramatically, but they're just tired, right? More tax, more red tape, the goalposts keep moving, right? You hear this every day. What does that actually look like on the ground for a real estate professional or business owner making strong income, in the top 10% in 2026?
The thing about the real estate related industry is it can be volatile, right? The market changes. We don't have control over a lot of those things. So not only can we just do some estate planning, but we have to make sure that there's flexibility throughout that process as well. It's not like you can just lock in the GIC for 20 years, because real estate agents, I know personally, you can make a lot of money one year and then the next year make significantly less. So when working with real estate professionals, you have to be flexible. You have to have the opportunity for liquidity if needed. You can't just lock something up necessarily for 10, 20 years. So not only are we helping them design their estate planning, but we're giving them the flexibility, along the way.
How do they stop the bleeding of taxes?
Well, there's a few ways, and we can get into the specifics a little bit more here, but for example, a lot of real estate owners, they want liquidity. So they don't want to deploy all their cash because they know the market's volatile. So oftentimes what they'll do is they'll put it into an investment inside their corporation. Now, you got to understand that anytime you invest in your corporation, you're going to get hit with a 50% passive income tax. So, you invest $1 million, you get 5% return, 25,000 is to the CRA. So this is the beauty of life insurance held within the corporation, is those retained earnings, rather than putting them into a vehicle that's going to be taxed at 50%, we just move them. A lot of people think of buying insurance as they're purchasing something and they're going to get the benefit when they die, but that's not the case. You can kind of think of it like a tax-free savings account within your company. You move money that's sitting from retained earnings into an insurance policy. It's still there, just like your TFSA would be, but insurance grows tax-free. So you're not going to be hit with that 50.67 passive income tax. You're also going to have the liquidity of it. If you need money in your company and you dividend it out, it's 36 to 48% tax. But through collateral loans, we're able to access this money tax-free. It's a loan. There's no tax on loans, similar to a HELOC. The differentiator between a HELOC and an insurance policy is HELOCs give you up to 80% of the equity. Insurance is guaranteed, right? We're all going to buy. So we're able to get up to 100% of the equity in the policy. So not only are we bypassing the passive income tax, potentially bypassing the salary or the dividend tax, but then God forbid when something happens and you do pass away, the money typically would be taxed to come out of your company. Insurance, again, is the death benefits tax-free. So the money is going to flow through your company to your family tax-free. It's going to increase the CDA account of your company. So we're going to be bypassing that as well.
That's the capital dividend account, right?
Yeah, that's correct.
Yeah. So you talk a lot about real estate, life insurance, and your firm takes care of both, right? Again, there's a huge stigma in Canada and in the US about life insurance, because I think a lot of people see it through the lens of like employee or regular mom and pops that use this just, okay, in case I die, right? At least I give something. But a lot of people or business owners don't look at it the way the ultra wealthy is using it, right? Which is, I imagine, the tax benefits that comes with it that I guess needs more education. Business owners need to be more educated on that, because if you see it through the lens of a tax savings vehicle, then that's where, for example, I'm a business owner and I see the benefit of through that lens. Why is it so important to think about these two, real estate and life insurance, simultaneously and not just focusing everything all in on real estate?
Well, I mean, I think it's very important to diversify your portfolio. So you're obviously, real estate has its own benefits. Insurance, similar to building a house, right? You're gonna have to start with the foundation and build upwards. Insurance is no get rich quick scheme by any means. Insurance is just a foundation that the house is built on. So if you were to build a house, or if you were to make a bunch of money through the real estate industry, you're obviously going to want to make sure that it's done on a proper foundation. So that's kind of how the two are aligned. I hope that answered your question, but feel free to...
No, that's good. That makes sense. I think that's just what we need, right? It's just more education on that aspect. A lot of people don't see, and it's funny because if you talk to a lot of the rich people and really wealthy, like 8, 9, 10 figure people, like they all have some sort of real estate and life insurance in their portfolio. So it's how can you bridge that gap of knowledge and education, or team, right? Finding the right team, find the right people that can surround you and give you that advice. So that's very powerful. And I know you said something as well that I want to touch on, which is that most real estate wealth isn't lost in bad markets, a bit like we talked about, but it's lost quietly through poor structure, default tax outcomes, and just no long-term plan. Just break that down a bit in simple language. What does poor structure actually look like for a successful real estate professional or just general business owner?
Yeah, so I mean, and it's honestly very crazy to me, as you know, like I mentioned previously, a lot of business owners are really good at business. They're good at identifying deals in the real estate market. They're good at looking at the numbers. They're good at acquiring real estate and disposing of it. But when it comes to the corporate planning, this is honestly where, you know, they're doing their job. I think death is a morbid subject. It's not something that people like to necessarily think about. But without the proper planning steps in place, these business owners, like what I mentioned previously, is this one business owner that I was just speaking to, he's acquired real estate with his partners. They're continuously acquiring it of the goal of building more wealth for their family, of more estate value for their family. And there's no planning in place at all. I mean, if you were to die, he's going to be hit, all of his assets are going to be deemed disposed at fair market value. There's going to be a massive capital gains bill that's going to need to be paid. His partners, in this case, aren't able to buy him out. So they would have to sell the assets. Like I said, after paying all the capital gains, the deemed dispositions, and then dividending the money out to the family, an $8 million portfolio turns to $2 million really quick. And it surprises me that, you know, well, it doesn't surprise me at all, actually. I mean, there's just not a lot of life insurance or estate planning is not in the business owners. That's not what he does for a living. So yeah, it's hard to think about that for some people, I guess. So that's why our job here is just to kind of educate people, you know, paint the picture for them. Say, hey, listen, if something were to happen to you tomorrow, which it very well could, this is what it looks like. And then you say, if you have this planning in place, this is what it looks like. Does that make sense for you? And typically, rather than going from 8 million to 2 million, we can go from 8 million to 10 million without doing much extra.
What's the biggest, like most common questions you get or biggest misconception that you get when you get on calls with those business owners?
Is this legal?
Yeah. Why do you think they ask that?
And the other one is, why isn't everyone doing this? Why do I think they ask that? Because it seems too good to be true, is what a lot of people say. Because there's not enough. For one, there's a lot of restrictions in the insurance industry on who can talk about it and whatnot. Accounting professionals are accountants, right? They're not life insurance licensed. They can't necessarily talk about it. So it's kind of up to you to go out there and look for these answers, because they're not necessarily going to come to you. Business owners are busy, so not often do they go out necessarily looking for these answers, or in time, at least. A lot of business owners, and everyone, I think it's natural to expect that you're going to live a pretty long time. So I think, once they see the benefits beside what their current estate plan is versus how life insurance can help, it's significant. So a lot of people are question the legitimacy of it, but I mean, it's written in the Income Tax Act, and it has been forever. I mean, these companies have been around 175 plus years.